Traders, welcome back to the Trading Psychology Fundamentals series. In this episode, we're talking all about your emotions, and I'm going to give you a key understanding that as a trader you must have if you want to go off and achieve consistent profitability, especially if you want to do so while managing stress and managing a lot of these harsh emotions that many traders fall into. Now, just a quick recap, this Trading Psychology Fundamentals series is all about giving you the key understandings you need to have as a trader to ensure that you can go into the markets, have consistent profitability without the negative emotions that plague so many traders. Now, if you find these videos useful, please make sure you go back through the playlist and rewatch all of them and share with your friends, your trading friends and your trading communities, those that you know will help them as well. But like we mentioned in today's video, we're talking all about emotions. Emotions 101. I'm going to give you a key understanding that you must have, as well as give you a very practical tool that you can actually go off after this video and implement to see a true return on investment in your trading. And that's like any of the other videos you watch on this channel, especially in this series. I'm going to be giving and have a very high priority on giving you actionable insights to ensure that you actually start to see the results in your trading. Now, without further ado, let's get into it. Okay, and we're talking all about emotions in this masterclass. Now, the big problem we're addressing today is a lot of traders, a lot of human beings, in fact, have a complete misunderstanding about emotions. They don't know what they are. They think they're bad. They think there's something wrong with them if they have emotions and stuff like that. So I want to clear up. I want to give my perspective on this, and I want to share a new way to see emotions and a new way to interpret them to ensure that you, in a sense, use them to your advantage as a trader to ensure you go off and achieve consistent profitability. Now, your emotions are not bad. You should not seek to remove them, but rather I'm going to encourage you to understand them. And what happens a lot of the time, especially I see this with a lot of clients and a lot of students, they come in and they list all the emotions and all the things they're going through, and they ask me the question, what's wrong with me? And the truth is, the emotions themselves aren't bad. They're very much a signal or a feedback to you as an individual on a deeper root issue, or a deeper root cause rather. And if you understand what the emotion is trying to tell you, and you can navigate that and you can address that, then you realize your emotions aren't bad after all. They were there guiding you and helping you. Just like when you have a symptom in your body, there are two schools of thought here. Some people say, you know what, the symptom is bad. I'm going to go to the doctors and get medication to treat the symptom and try and get rid of the symptom. And there are other people who take an alternative approach and they realize that, you know what, the symptom is just a symptom. There's a deeper root cause here. And you try and navigate and you try and figure out, all right, what's this symptom trying to point out for me? What's the deeper root cause? You know, if you have a massive night out and you drink and you eat terrible food and you wake up the next morning with oily skin and a hurting stomach, you can go off and take medication to treat those symptoms, or you can use the symptoms to realize that the root cause was the excessive drinking the night before. Now, I'm not saying one school of thought is right and the other is wrong, but I want to use that as an analogy to show you that emotions are very much the same thing. You can try and put a band-aid over your emotion and go and meditate, for example, or you can use the emotion as the feedback to the deeper root cause and have a deeper understanding of your psychology and what's going on and use them to your advantage. And I'm afraid a lot of the times people don't know how to interpret their emotions, especially traders. They don't know how to interpret their emotions. And as a result, they're run by them. They don't run them. Okay? So your emotions are a feedback, they're a signal. And by the end of this video, you're going to have a much deeper understanding of what I mean by this, as well as a very practical tool. Now, it's also worth mentioning here that some of the greatest investors out there, Warren Buffett, for example, has a very famous quote where he says, don't expect to control your money unless you can control your emotions. And a lot of traders neglect the emotional component. They neglect their psychology and they think they can just go off and have a profitable system or an algo and they can make money from the market consistently. But the truth is, your emotions are going to have a huge impact on decision making, on risk management, how much you risk, over risking, under risking, over trading, under trading. Even when you do make money as a trader, your emotions are going to have a huge impact on the way you go off and spend that money and what you do with that money. So your emotions have an enormous amount of influence over your trading, even if you have a completely mechanical and automated trading system. So understanding your emotions is a crucial part of your success and being able to have consistent profitability as a trader, which is probably why you're here. So let's get into it. Now, the key understanding I want to pass on in this video, now I could be talking about emotions and trading for hours, and in fact I do in some of my programs, and there are so many different components we can discuss, but I thought for today's video, what's the one key thing that I could pass on to you that would have the biggest bang for buck, that would have the biggest impact in your trading, and it's this. Now, one component or one insight I want to pass on is this whole idea of the anchoring effect in psychology. And your emotions are determined in large part based on an anchor, based on the anchor. And I would love to give a few analogies for this. And it's very simple. It's very easy to understand. Let's imagine you had a certain expectation. You're at your favorite restaurant and you rocked up and you had a certain expectation of how the food tasted that day or that night. And unbeknownst to you, the restaurant had a different chef in today and they used different ingredients and they used different spices. And because in your mind you had a certain expectation of the pleasure of the food and how it was going to taste, when you then get that plate of food and now all of a sudden it tastes different and it tastes worse in your mind, then you're going to be disappointed. You're going to be angry. You're going to have a negative emotion in that moment. So in that particular example, you had an anchor in your mind about what the outcome was going to look like, and what the outcome really was in actuality was different to what you expected. And as a result, you had a negative emotion. So too, you can have a certain expectation on how a certain food's going to taste, and maybe it's quite low in your mind, and then they could have a different chef, different ingredients, different spices, and they absolutely nail it that day and they serve you. And because actuality, the food exceeded your expectations, you're all of a sudden happy, you're excited, you have these positive emotions. So in both scenarios, both negative and positive emotions, it's important to realize that the emotion is a result of a certain expectation, a certain anchor. Okay? And I just use the food analogy as an analogy, but it's true also with your trading. We can have a certain expectation of how we think a position is going to play out, how a certain trade is going to play out, an expectation of a certain price over a certain time. Euro dollar is going to go this direction, it's going to get this far, and it's going to take this amount of time. And we're going to have an expectation of how much money we're going to make and how much funding we're going to get for that, how much recognition we're going to get from that. And if in actuality the market doesn't align with all those expectations, just like the food, we're going to be incredibly disappointed. We're going to have negative emotions. So too, if the market exceeds our expectations and it goes above and beyond that, and we profit from that, profit more than what we thought we would, or we had an expectation that the trade was going to be a loss further into the positions close to our stop loss, and then all of a sudden it turns around and hits you take profit, then you can have a positive emotion. So what I'm trying to communicate here is that your emotions are in large part determined based on the anchor, based on the anchor being the expectation that you set. So when your expectations are exceeded, you tend to have a happy, elating, and positive emotion as a result. And when your expectations aren't met, or actuality falls below your expectations, you tend to have a sad, depressing, negative emotion. Okay? So I want to use this little insight here to paint the picture to help you understand how you can use this to help become a better trader. Okay? So let's implement this solution. One thing that's become very obvious to me after working with many traders, hundreds of traders, and having a full spectrum of traders I've worked with, some that are a little bit more amateur, just coming into the game, and some that are a lot more experienced, managing quite a bit of capital and putting large positions on. One thing that's become very obvious to me is that the amateur trader tends to oscillate between being happy, being positive, being elated, and then also to the other side of that, the other extreme, being sad, being depressed, being negative. And the amateurs tend to get caught up in the polarities, the positive and negative, because they have and hold on to expectations in the outcome. Okay? Just like I mentioned before, it's like going to your favorite restaurant every night and having a certain expectation, and sometimes they meet it, sometimes they don't. Sometimes you're happy, sometimes you're sad. That's what I would call an amateur individual who has no level of self-governance and they're run by the outcome. You see, in that scenario, the way that individual feels is determined based on the external world. So they're putting how they feel in the hands of an unforeseen circumstance, in the hands of something that they have no control over. In my opinion, that's not the way to live. That's not the way to trade. That's not the way you achieve any level of mastery in whatever endeavor you want to pursue. Now, a professional trader, in my observation, they stand above the polarities. They stand above the positive and negative. In other words, they don't put expectations on the outcome. They're process-driven. They're process-based. They know their trading plan. They know the process behind that. They have realistic expectations in terms of the outcome. They realize that if they consistently execute on their process over a large sample space, over 1,000 trades, they will be profitable. But to expect an individual outcome on an individual trade is unrealistic. So a professional trader stands above the polarities, above the positive and negative, above the outcome, because they're thinking more long-term. They're thinking, how do I consistently execute on my process now so that I can approximate my edge over a large sample space? Whereas the amateur trader doesn't even care about the large sample space. All they care about is being right now and being positive and being up and being profitable right now. So what I want to do in this video is help you transition from an amateur to a professional. And guess what? The amateurs are highly emotional. And when I say emotional, it doesn't just mean negative, it means positive as well. And traders get caught up into this idea that they can be a positive, happy trader, but they can't have the other polarity. And what I'm trying to communicate with a lot of my videos and a lot of my programs is you have to learn to transcend both. Because both emotions, both polarities, the positive and negative, are going to impact your ability to have consistent profitability. If you're in a negative emotion, you're going to be run by fear. Fear is going to be promoted in your trading. So when the market presents an opportunity that aligns with your trading plan, you're not going to execute out of fear. You're not process-based. You can't have consistent profitability. Why? Because consistent profitability comes from the consistent execution of your trading plan. So when you're run by fear, you can't have consistent profitability. Now, if you're positive in the market and you're elated and you're up, now you're going to be in a state of greed, or you're going to be in a state of feeling invincible and projecting low quality setups onto the market. You're going to feel like you think you can predict what's going to happen next. And guess what happens? You get humbled because the market's never wrong. And if we're trying to force an agenda into the market's going to humble us very quickly. And in those scenarios, again, you're not executing on your trading plan. And again, you can't have consistent profitability as a result. So what I'm trying to communicate here, that in order to have consistent profitability, in order to transcend your emotional state as a trader and to master and manage your emotions, to transition from an amateur to a professional, you want to be implementing this tool. I'm going to give you a tool that's going to help you do that. And truth be told, being unemotional in the market, or being grounded, or managing the emotions that do pop up, and being consistent and profitable are one and the same. They're the same thing. Okay? So what I want each and every single one of you to do is to focus on entering every single trade free of expectations on the individual outcome. Free of expectations of what you think is going to happen next on the outcome. And you have to be very aware of this. I've created a tool, a free Bulletproof Your Mindset tool. This is in the first link in the description, first link in the comments as well. I want each and every single one of you to go into that, click the link, put just your first name and your email, and that tool is going to be sent to your email, and you'll have access to that tool for life. It's completely free. And in that, after this video, go in there and watch the 2 videos. There's one little bit of theory, and there's one walkthrough that I walk you through the tool exactly on how to use it. And that tool is going to help you be free of any expectations prior to every single trade you take. And as a result, what's going to happen over time with that tool is you're going to build up this muscle of being aware of any outcome-based expectations, being able to ground them before you get into a position and going back to your processes. That tool is literally going to help you transition from being an amateur to a professional trader. That tool is going to help you rid any expectations before your trades on the outcome, and as a result, any emotional reactions after a trade, because now you don't have an expectation of the outcome. So no matter what happens in the market, you're unencumbered by it. You just come back to your trading plan the next trade. And as a result, that tool is also going to help you build consistent profitability. You know, if I'm to pass on one thing on emotions, a quick and easy fix that every trader can implement right now, it's that tool. It's really that tool. It's a tool I created after observing many traders. And I had this question, how can I help traders go from amateur to professional, from outcome-based to process-based, from inconsistent to consistent, from emotional to unemotional in the markets? It's this tool. And hey, guess what? You may have an emotional reaction every so often, but now you also have an understanding of where it came from. The tool will help you see that. So you can train your mind into realizing that your emotions aren't random. They're not out to get you. They're not bad. They're a reaction based on a certain expectation you've set, based on a certain anchor you've set. Okay? And that's a liberating realization to have, because you realize that you're in full control of your reactions in the market and your emotional state in the market, and not only in the market, but in your life in general. So if you haven't already, please go into the description, download that tool, start using it, do it for the next 2 months and see what type of an impact that has on your trading. I guarantee you it will be transformational. Okay, now in summary, your emotions aren't bad. They're a feedback, they're a signal. Understand them. Seek to understand your emotions before you punish yourself for having an emotion. They're not bad. They're not something you want to get rid of. They're not something you need to get rid of. Rather, there's something that you need to understand the root cause, understand where they come from, your expectations, learn to manage your expectations, and guess what? You're not going to be as emotional as a trader anymore. Now, you want to ask quality questions that expand your awareness. The Bulletproof Your Mindset tool is going to help you do that. It's going to help bring balance to your mind, and it's going to help keep you process-based. So make sure you go into the description, download that tool, and start using it, because that tool is going to help you learn to self-regulate. Now, self-regulation is all about managing yourself so you're not run by the market. Remember, the amateur is run by the external world. They're run by the market. When they're in fear, they're not trading. When they're in greed, they're over trading. That's run by the external. When you utilize the Bulletproof Your Mindset tool, when you utilize the principles that I just taught you in this YouTube video to understand your expectations, and you learn to self-regulate, you learn to regulate your expectations, you quiet down the emotions, the fear and greed, and guess what? Now you run yourself based on your processes. You're not fearful in the market anymore because you don't have an expectation on a positive outcome, so there's no fear associated, and there's no greed either, so it allows you to be present with the market and just execute on your trading plan. When you do this, you're on track for consistent profitability. Why? Because you're not run by your emotions anymore, and you can consistently execute on your trading plan, and as a result, you can have consistent profitability. Okay? So if you found this useful, please like, comment, and subscribe. Thank you for watching all the way to the end. I look forward to seeing the impact that the Bulletproof Your Mindset tool has on your trading, on your emotional state, and also on your profitability. Now, if you have any questions on that, or you want to share some transformations or some insights you've gotten from using that tool, just email me or comment them below. I respond to everybody, so just let me know. And if you found this trading psychology fundamental video useful, please share it with your trading friends and trading communities. And if you found this one useful, you're going to love the rest of them, so go check those out, and make sure you're subscribed for the next drop on the Trading Psychology Fundamental series. But I look forward to seeing you all in the next video.